Assalamualaikum and salam sejahtera. This is topic 5, books of prime entry, and we're going to cover on the introduction to source document, types of journals, types of ledger, and the recording process from source documents to journal and posting to ledgers. Alright, so I know that it's like we are repeating the same thing. Yes, we are, except that, alright, in the previous topic, which is topic 4, okay, we did not introduce to you yet on the special types of journal and also the special types of ledger. All right, but at that time we hope that when you journalize the transaction, you post to the ledger, you prepare the trial balance, all right, and then you prepare the financial statements. We hope that from a simple journal, which is the general journal, okay, where you have a debit and credit column, we hope that at that time it would enhance your understanding, all right, on the accounting, on the effect of the business transaction on the accounting equation. All right, and then from there you are able to prepare the journal entry, you are able to journalize the transaction, because from the accounting equation, like what I have taught you previously, all right, from the accounting equation, you may use that accounting equation as a guideline for you, okay, to know which account to be debited and which account to be credited. All right, so that is the aim for the previous topic. So that's why when you generalize the transactions, all the transactions are generalized in general journal, where you have debit and credit column. However, not all transactions are to be recorded in the general journal. Okay, you are going to learn that there are different types of journals, all right, and even the ledgers, all right, you did prepare the ledger, okay, you did learn on how to prepare the ledger, except that, okay, at that time we did not mention about the different category of ledger, different types of ledgers. All right, okay, so now in topic 5, okay, after you have the understanding on which account to be debited and which account to be credited, okay, with that understanding, we hope that, all right, after the preparation by using a specialized journal, okay, you are still able to transfer from the journal to the ledger correctly. Okay, you know which one is to be debited and which one is to be credited. All right, okay, so let's look at the source documents first. Okay, but I think the next slide is on the topic outcome. All right, so at the end of this topic, you should be able to, number 1, to identify the different types of source documents, journals, and ledgers. All right, and then to explain the function of source document, journals, and ledger, and to prepare the records from source document to journals and the posting to ledgers. All right. Alright, so let's look at what is a source document. Alright, source document is used to support the business transaction and serve as an evidence that we have performed the business transaction with the other party. Okay, so the source document can be a printed document, it can be an electronic document, but regardless of its form, okay, either it is printed or an electronic document, all right, we have to keep them safely, all right, for future reference. Okay, all right, there are different types of source documents because there are different types of business transaction. All right, so in this table below, okay, in this table, okay, we have the explanation, okay, for the different sources of documents, okay, including the contents of the document, all right, and also the purpose of the document. So instead, we go through together this table. Okay, I'm going to illustrate to you, okay, the business transaction and the source document that will support the business transaction. All right. Okay, for this illustration to be successful, you have to put yourself as a business. Okay, we are the business. All right, we are the business. Okay, we are not the owner of the business, we are the business. All right, okay, so let's start. All right, so before we start our business, of course we need to purchase the goods from the supplier. Okay, so this is the business. All right, so before we start our business, we need the goods and we need to purchase the goods from supplier. All right, so you can go to the supplier, all right, directly, all right, and then purchase the goods immediately. Yes, you can do that. But the best practice is to go to the different suppliers, all right, and then to make a survey, all right, of which supplier could give you the best offer, all right. So for you, in order for you to do that, okay, let's say for example you go to 3 different supplier. Okay, we go to 3 different supplier 1, 2, and 3. All right, so when we make a survey, okay, of which supplier that we want to order, usually, okay, we are going to ask from them to send us, okay, to send us what we call a business quotation. Sorry, a quotation. Okay, a document called quotation. So in this quotation, all right, the supplier will describe about the goods as well as the price. Okay, all right. So once we receive all the quotations from different supplier, okay, so we are going to decide. We have to decide, okay, on which supplier that we are going to purchase from. All right. So let's say, for example, after a very careful consideration, okay, we decide. Okay, let's say, for example, we have decided that we want to order from supplier 2 because we like the quality of the goods that they offer and the price is reasonable, giving the quality of the goods. All right. Okay, so I'm going to eliminate, all right, other supplier. Okay, so we decide that, all right, so let's order from supplier 2. Okay, so in order for us to order from supplier 2, what we can do is, okay, we are going to send to supplier 2 a purchase order. A purchase order, okay, describing of the goods that we want to order, all right, the price, the terms of delivery, all right, and other items, okay, that we want to include, right? Okay, so once the supplier receive, okay, so once the supplier here receive the purchase order from the business, okay, supplier here would prepare a sales order, okay, supplier would prepare a sales order, okay, to its department. Okay, they're going to prepare a sales order, all right, to its department, store department, okay, or warehouse. All right, and once the goods are prepared and ready to be delivered, so they are going to deliver us the goods. But they are not going to deliver only the goods, okay, but the goods will come together with goods dispatch note. All right, it comes together with goods dispatch note. All right, okay, so goods dispatch note will describe of the goods that they deliver, okay, and the quantity. All right, and then maybe other information as well. Okay, other information such as the details of the supplier. All right, the details of the supplier. All right, and then in return, okay, in return, after we receive the goods, okay, of course you have to check the goods first. Okay, you have to check, you have to count, you have to take sample, you have to see whether the goods that you receive, okay, are the one that you order. All right, the goods that you receive meets the quantity that you order. Okay, all right. So once you have satisfied with that, then you are going to, okay, issue to the supplier. Okay, you are going to issue to the supplier goods received note. Okay, you are going to issue to the supplier goods received note. All right, and then once they accept your goods received note, okay, they are going to issue an invoice. Okay, they are going to issue an invoice. Okay, so they're going to issue you an invoice. All right, so what happened when they issue you an invoice? Okay, when they issue you an invoice, they basically have prepared your account. Okay, so they basically have prepared your account. All right, so what happened here in supplier 2, all right, so what happened? Okay, when they send you the invoice, they have prepared your account, all right. Okay, account receivable. It is account receivable because they sold you goods on credit, all right. Okay, so B, okay, right, account receivable B. So they are going to record here as sales. Okay, and when you receive the invoice, you are going to prepare an account. Okay, account payable for supplier 2, okay, for purchase of goods. All right, okay, so this is what happened. All right, let's say for example, okay, because you order goods in bulk, there's so many goods that you receive. Okay, only after let's say for example there are so many boxes, okay, but after you open one box, all right, after a certain period of time, okay, you open one box, all right, and then you notice that in this box, okay, all goods are damaged. Okay, all goods are damaged. So you decide to return to the supplier. Okay, you decide to return to the supplier. When you decide to return, okay, the goods to the supplier, okay, you have to send, okay, you did not only send goods, okay, to the supplier, but you are going to send to the supplier a debit note. A debit note. Why it is a debit note? All right, so look at here why it is a debit note. It is a debit note because, okay, it is a debit note because, all right, because you are going to debit account payable supplier 2 because you have returned the goods. So the liability, your financial obligation to supplier 2 is now decreased. Okay, so you're going to return and you're going to record that as return outward. Okay, you're going to record that as return outward. Okay, all right. So this is why it is called a debit note, because you debit the account. Okay. What is the journal entry? I hope you still remember. Once you return the goods, okay, so what happened here is you are going to debit account payable and you are going to credit return outward. Okay. So here you debit. Right, so that's why you issue debit note. You want to notify the supplier that you have debited their account payable. All right, so once the supplier received debit note from the business, okay, so what happened is that they are going to record the goods return. Okay, so how do they record the good return? They are going to, okay, so this is on supplier part. Okay, so what they are going to do is they are going to debit. Okay, they're going to debit sales. Okay, they're going to debit sales account and credit account receivable of B. Okay, so they're going to record it here as return inward. Okay, right. So because of that, because they credit your account, so they are going to send you, okay, a source document called, okay, a source document called credit. Okay, credit note. Okay, credit note. Why credit note? Because they credit your account. Okay, all right. Okay. Okay, so after some time, let's say for example, you are now almost reaching towards the end of the credit term given by the supplier. So you have to settle the accounts, all right? And then, in fact, if you settle the account earlier, all right, it is possible that there is a possibility that, okay, the supplier give you a discount, all right? So let's say for example, okay, you settle, you make a payment to the supplier. Okay, you make a payment to the supplier. When you make the payment, all right, you did not send the money only, but you will send to the supplier, okay, remittance advice. A source document called remittance advice, okay, to notify the supplier that you have made the payment. It can be cash, it can be check, it can be online transfer maybe, right? So that's why we need to send to the supplier to notify that, okay, we already made the payment, okay? So you send to the supplier. All right, so once the supplier receive the payment, they have checked that they received if it is a check, okay, they receive the check cash, okay, it will be easier to identify. For online transfer, maybe they have to check first, all right? Okay, so once they receive everything, then they are going to issue a receipt. Okay, they are going to issue a receipt to the business, okay, notifying that they have received the payment. Okay, all right, so that is my illustration. All right, I hope you understand. So that is my illustration for the source document. All right, for the source document. All right, so if you need a better understanding of a source document, the contents of source document and the purpose of source document, so you may refer here to this note. All right, okay, so we have quotation, purchase order, sales order, goods dispatch note, goods receive note. Okay, and then we have here invoice, debit note, credit note, okay, remittance advice, and receipt. Okay, so I think I covered everything in my illustration. So if you need to know further of this, then you have to read, okay, from the notes here. All right, okay, next. All right, so you have been introduced to the source documents. All right, so now you know, I hope that you know now to relate, okay, the source document with the possible business transaction that happened. All right, okay, so now we are going to generalize the business transaction. All right, we are going to generalize the business transaction in the appropriate journals. Okay, in the appropriate journals. All right, maybe you wonder, all right, previously I have recorded everything. I have journalized everything. I have prepared debit and credit. Okay, yes, you did that. All right, in our previous discussion, we did that. All right, where I show you in Mohibah Cake House example where we journalize the transaction. Okay, where we debit and credit every accounts. But the journal that we use is only general journal. There are different types of journal. Okay, in practice, there are different types of journal. Okay, so I hope you understand that the reason why we start with only the general journal, because we want you to understand. All right, we want you to understand the concept of debit and credit. Okay, and which account to be debited and which account to be credited due to that business transaction. All right, so once you already understand that, all right, now we are going to teach you that there are different types of journals. Okay, there are different types of journal. Okay, so the first recording process in accounting is journalizing the business transaction into journals. All right. However, okay, we do have, okay, instead of general journal, we do have 7 types of journal. Okay, we do have different types of journal, okay, other than the general journal, which are purchase journal, sales journal, return outwards journal, return inwards journal, cash receipt journal, cash payment journal. Okay, alternative for cash receipt or payment journal, okay, we can also use cash book. All right, cash book where we combine both cash receipt and cash payment. Okay, all right. All right, so let's look at the functions of journals. Okay, so there are 7 types of journals, and the functions of each journals, all right, are number 1, for general journal, we use general journal to record the transaction which does not belong to purchase journal, sales journal, return inward, return outward journals, cash receipt and cash payment journals. All right, and we use also, okay, the general journal to record the opening entries, correction of errors, and if we have any adjustment. Okay, so what is a purchase journal? So purchase journal, all right, to record purchase of goods on credit. Okay, so whenever we have a transaction, okay, purchase of goods on credit, then we record in purchase journal where we are going to provide the details of the supplier. Okay, all right, and then for the sales journal, okay, we are going to record goods sold on credit. We are going to record goods sold on credit. Okay, and then for return outward journal, okay, this is used to record return of goods purchased on credit. To record return of goods purchased on credit. Okay, previously you record in purchase journal when you purchase the goods. All right, and then when you return the goods to the supplier or to the seller, all right, so the return of goods will be recorded here in return outward. All right. For return inward, this is to record return of goods sold on credit. Okay, previously we record that, okay, in sales journal when we sold the goods on credit, but when our customer return the goods, okay, to us, then we are going to record that in return inward journals. Okay. And then we have cash receipt journal. Okay, so this is to record all cash received from any source. Okay, so to record all cash received from any source, it could be from the owner, which is the capital. It could be from the customer, okay, which is the sales, okay, cash sales. It could be from okay, from the account receivable who settle their accounts. All right, so when we sold goods on credit, we record in sales journal. All right, when the account receivable, okay, when the account receivable made the payment, then we record that in cash receipt journal. Okay, all right, and then if you receive any loan, all right, so any other income, okay, so all cash received are to be recorded in cash receipt journal. Okay, for cash payment journal, to record all cash paid for any purpose. Okay, it could be because you purchase goods using cash. Okay, it could be because you made a payment to your account payable. Okay, previously you purchase on credit and then you make payment to your supplier or to the seller. Okay, so we record in cash payment journal. It could be the owner took cash from the business. Okay, so we record in cash payment journal because cash payment journal is to record all cash paid for any purpose. Okay, it could be also the payment of loan. All right, the payment of expenses. Okay, all right, so That is how we record the business transaction. Okay, we do not record only in general journal actually, but we record in different journal for different transactions. All right. Okay, so I hope you are clear now. All right, on the journalizing the transaction in the appropriate journal. Okay, so because we have 7 types of journal, so this transaction, all right, all the transaction that you have learned before, okay, they are not to be recorded only in general journal, but we are going to prepare separate journal, okay, for for different transaction. Okay, for example, for purchase goods on credit, all purchase goods on credit are to be recorded in purchase journal. Okay, what if you purchase an asset on credit? You cannot record in cash payment journal because you did not make any payment for the asset purchase. Okay, for asset purchase on credit, we record in general journal. Okay, what about the asset received from the owner? Okay, we did not make any payment to the owner, so we cannot record that in cash payment journal. It is not a purchase of goods. Okay, we receive we receive asset from the owner. All right, so we are going to record that in general journal. Okay, so those two are the examples of the use of general journal. Okay, all right. Okay, so let's look at the next one. Okay, the types of ledgers. All right, I know that I have introduced you to the different types of. I know that I have introduced you. Okay, in previous lesson. Okay, I have introduced you what is a ledger. Okay, what is the format of the ledger? Okay, how to prepare the ledger, how to post from the journals to the ledger. All right. Okay, but actually the many ledgers that you have prepared before can be categorized into 3 different categories. Okay, but before that, okay, what is a ledger? So this is the second recording process in accounting, which is posting the transaction recorded in journals to ledger. Okay, ledger, it can be a book, set of loose cut of files that accounts. All right. Okay, so 3 different types of ledger are general ledger, purchase ledger, and sales ledger. Okay, general ledger, purchase ledger, and sales ledger. However, for purchase ledger and sales ledger, it does not refer to sales account or purchase account, but this is account payable accounts, okay, account receivable accounts. All right. Other than these two, other than the account payable and account receivable, okay, we are going to classify them under general ledger. Okay, all right. So we have only 3 types of ledger. Okay. All right. So from this recording process of business transaction, all right. So where are we now? Okay. So you have been introduced to the transaction. All right, to the different types of source document, all right, to the different types of journals, including the functions of each journal, all right, and then from the journal, we are going to post to the ledger. So there are 3 different types of ledger: general ledger, purchase ledger, and sales ledger. So general ledger, okay, ledger other than, okay, purchase ledger and sales ledger. Okay, all right. So journals, okay, 7 types of journals are general journal, purchase journal, sales journal, written inward journal, written outward journal, cash payment journal, and cash receipt journal. All right. Okay. So you have learned so far, okay, to identify the business transaction, all right, and then what are the source documents that support the transaction, okay, and then you have learned on how to journalizing the transaction to the journals. But previously, I have introduced you only to general journal, all right, but now in this topic, we are going to post them into the appropriate journal, okay, and then from the journal, you have learned to post to the ledger. But this time around, okay, the way we post to the ledger, okay, could be different from the previous lesson, okay, because we are no longer, okay, transfer all the transactions one by one. Okay, we did not post one by one to the ledger. We are going to post only the total. Okay, all right, and then from the ledger, okay, after you balance off the account, all right, then you prepare the trial balance. Okay, so you have done this. Okay, all right, and then okay, and then we have looked also at the preparation of the financial statement, right? Except that in the previous lesson, okay, okay, we assume that, okay, there is no adjustment needed. Okay, all right. But in the following topics, okay, I'm going to teach you on the adjustment. All right. Okay, so that's all for now. All right, so this is the process, okay, that you have actually gone through, okay, for the recording of a business transaction. Okay, all right. Okay, so let's look at this example together. Okay, so this is the same example that we discussed previously for Muhibah Kit House, okay, for topic 4. Right, so same example except that now we are going to generalize the transaction not only to the general journal but also to other 6 types of journals, okay, which are purchase, sales, return inward, return outwards, cash receipt journal, and cash payment journal. Okay, so before I proceed to the journals, okay, so let's discuss on the business transaction, okay, and which journals, okay, to record this transaction. All right. Okay, so let's look at the first one. Started the business with office furniture worth 5,000 and cash 10,000. All right, so started with office furniture. So we have here office furniture. Okay, so office furniture is an asset. All right, so office furniture is an asset, and in this case, all right, we, which is the business, okay, assuming that we is the business, all right, we are the business, all right, okay, so assuming that we are the business, okay, so when you receive an asset, so we as the business, we receive the asset, okay, we receive office furniture, which is the asset, and this office furniture is not a purchase of goods, of course, because this is an asset. All right, and you did not make any payment for office furniture. Okay, so meaning that we cannot record this in cash payment journal. Okay, so the only thing left is for us to record in general journal. The only journal left is to record in general journal. Okay, what about the money received from the owner? Cash 10,000. All right, so cash 10,000. Any cash transaction is to be recorded in either cash receipt journal or cash payment journal. This money we receive, so we record in cash receipt journal. Okay, next. Purchase goods on credit. Okay, purchase goods on credit is to be recorded in, this is purchase good on credit, you did not make any payment, so no cash involved, right? So you cannot record in cash payment journal, okay, because you did not took any cash, okay, for the payment to Sweet Kapi Enterprise, okay, this is on credit. All right, so we cannot record in cash payment journal, okay, but we can record in purchase journal because this is purchase of goods, okay, purchase of goods in purchase journal. Okay, next. Okay, transferred 6,000 cash into the business bank account. Cash. You take out cash and then you deposit to bank account. Okay, both are cash transaction. So both will be recorded in either cash receipt journal, okay, for bank, and then cash payment journal for cash. All right. Okay, next. Puan Laila brought in motor vehicle, again an asset brought by the owner, worth 7,000 for business use, so we are going to record this in general journal. Sold kits on credit. Sold kits on credit. Okay, you sold kits to the customer, you did not receive any money yet because these sales, all right, are made on credit. Okay, these sales, okay, are made on credit, so sales journal. Next, Koi Cupcake return kits, okay, 310. So previously you record in sales journal and then Koi Cupcake returns. Okay, so return for sales is return inward. So record in return inward journal. Okay, next, return goods to Sweet Cupcake. So previously you purchased from Sweet Cupcake on credit. Alright, and then you return to Sweet Cupcake. Okay, so when you return the goods, you did not receive any money because you purchased on credit. Okay, so what you are going to do is to deduct from Sweet Cupcake account. Alright, so when we journalize the transaction, we are going to record this in return outward journal. Okay, return outward journal. Alright, so next, cash sales to Rina worth 450. Okay, look at here, cash sales, any cash. Alright, any cash received or paid. Okay, are to be recorded in either cash receipt journal or cash payment journal. So this one, when you make sales to Rina, you receive cash. So cash receipt journal. Next, Puan Laila took goods worth 200 ringgit and cash. Okay, took goods. Alright, so goods. We cannot record this in purchase journal because this is not purchase of goods. We cannot record in cash payment journal because Puan Laila did not take any cash but a good here. Okay, for this one, good. Alright, so this one will be recorded in general journal. General journal. Whereas for this one, for the amount of cash took by Puan Laila, will be recorded in cash payment journal. Okay, next. Paid 600 by check. Okay, paid check. So cash at bank. Paid. Alright, so cash payment journal. Paid Sweet Cupcake. Again, paid. Okay, check. Alright, for full settlement. Okay, so you paid. So cash payment journal. Purchase goods by cash. Purchase goods cash, meaning that you purchase something, you took out your cash, okay, of 550. Alright, so this will be recorded in cash payment journal. Okay, alright, so let's look at again. Okay, so started the business with the office furniture, so asset. Okay, you receive asset from the contribution of the owner, so that one will be recorded in general journal. Okay, and then you receive cash. Okay, so any cash receipt journal. Purchase goods on credit, purchase journal. Transfer cash into bank account, both cash in hand, cash at bank. Okay, one decrease, one increase, so cash receipt journal, cash payment journal. Puan Laila brought in motor vehicle. Again, you receive asset from the owner. Alright, worth 7,000. General journal. Sold cakes on credit, sales journal. Koi Cupcake return. So this is sales, credit sales. Okay, so this is credit sales, and then Koi Cupcake return. Okay, so return for credit sales, return inward journal. Return goods to Sweet Cupcake. So previously we purchased on credit from Sweet Cupcake and then we return the goods to Sweet Cupcake. Okay, so this is return for credit purchase, return outward journal. Cash sales to Rina. Cash sales to Rina, meaning that you receive money because you sold something to Rina. Okay, so cash receipt journal. Puan Laila took goods. Okay, this is not purchase of good, cannot go to purchase journal. Any no transaction involved here for purchase of goods. For took goods. Alright, so general journal. Okay, but the amount of cash taken by Puan Laila, okay, 310. Okay, that one will be recorded in cash payment journal. Alright, paid 600 by check to Nani for her monthly salary. Paid, so cash payment journal. Paid Sweet Cupcake again, check, cash payment journal. Purchase goods by cash. Cash, you purchase something, so you make payment. Alright, so cash payment journal. Okay, so now let's journalize the transaction in its appropriate journal.